As of the last market close on October 6, 2025, Advanced Micro Devices Inc., trading under the ticker AMD, closed at a remarkable $203.71, marking a staggering single-day gain of $39.04, which translates to a 23.71% surge. The market is currently closed, but this closing figure sets the stage for what is bound to be a volatile and closely watched trading session when the bell rings again. Now, a jump of this magnitude naturally grabs headlines, and the immediate assumption, the dominant market expectation, is that this is purely a reaction to a singular piece of major news, perhaps a groundbreaking product announcement or a blowout earnings surprise. The reality, however, is far more complex and points to a fundamental recalibration of AMD's valuation in the face of a shifting competitive landscape. This isn't just about one event, it's about the culmination of strategic execution finally being recognized, forcing investors to abandon their previous models and reevaluate what they thought they knew about the semiconductor industry's second-largest player. The common belief has long been that AMD is in a perpetual catch-up race with NVIDIA, forever the underdog nipping at the heels of the giant. But the recent price action suggests that this narrative might be fundamentally flawed. What we are witnessing is not just a stock reacting to news, but a market waking up to the possibility that the gap between AMD and its competitors is closing at a pace few had anticipated, a development that carries profound implications for anyone invested in technology, from those using Schwab Intelligent portfolios to traders on Interactive Brokers. The surge to $203.71 was not a quiet affair. It was accompanied by an explosion in trading volume, far exceeding the daily average and indicating significant institutional participation. This wasn't just retail investors on platforms like Robinhood piling in. The order flow suggests large block trades, characteristic of major funds and asset managers making substantial capital allocations. This level of conviction from institutional players is a critical signal. They are not just chasing momentum, they are making a calculated bet on AMD's long-term trajectory. Scrutinizing the intraday movement reveals a pattern of sustained buying pressure throughout the session. While there were minor pullbacks, these were quickly met with renewed buying, preventing any significant retracement. This is the hallmark of a stock under accumulation, where dips are seen as opportunities to add to positions. The expectation might be for a sharp pullback after such a massive run-up, a classic buy the rumor, sell the news scenario. But the reality of the underlying institutional support suggests a new higher baseline for the stock may be forming. This has significant implications for various investment strategies. For those utilizing online investment platforms like SoFi Invest, understanding this shift from speculative frenzy to institutional repositioning is key. It's the difference between a fleeting price spike and a sustainable re-rating of the company's value. We're seeing a direct challenge to the long-held assumption that AMD's fate is solely dependent on the crumbs left by NVIDIA. The market is now pricing in a scenario where AMD carves out a much larger, more profitable piece of the pie for itself, particularly in the high-margin data center and AI markets. This dramatic repricing is not occurring in a vacuum. It is deeply intertwined with the broader narrative of artificial intelligence. For months, the conversation has been dominated by NVIDIA's seemingly unassailable lead in AI accelerators. Investors, from those managing individual brokerage accounts with Fidelity to those exploring Fidelity ETFs, have poured capital into anything associated with NVIDIA's CUDA platform. The expectation was that AMD's offerings, while competent, would struggle to gain significant traction against such an entrenched incumbent. The reality, however, is that the demand for AI compute is so insatiable that it is outstripping the supply of any single provider. Major cloud providers and enterprises are actively seeking viable alternatives to mitigate their reliance on a single vendor. And AMD's MI300 series of accelerators is emerging as that credible alternative. The recent surge is in large part a delayed market reaction to the growing evidence of significant design wins and large-scale deployments of AMD's hardware. This isn't just about a single product, it's about a strategic shift in the market that favors a multi-source supply chain for critical AI components. This is a crucial point for anyone engaged in self-investing or seeking investment help. The narrative is no longer a simple David versus Goliath story. It is evolving into a more complex ecosystem where multiple players can thrive, and the market is just beginning to price that reality into AMD's stock. Advanced Micro Devices operates at the forefront of the semiconductor industry, designing and developing high-performance computing and graphics technologies. Its business is broadly segmented into 4 key areas: data center, client, gaming, and embedded. The data segment, which includes the EPYC server processors and Instinct AI accelerators, has become the company's most critical growth engine. The client segment includes the Ryzen CPUs and Radeon GPUs for desktop and notebook PCs. The gaming segment is responsible for the semi-custom chips that power major consoles like the Sony PlayStation and Microsoft Xbox, as well as discrete Radeon GPUs for PC gaming. The embedded segment provides solutions for a wide array of markets, including industrial, automotive, and networking. For years, the company's business model was focused on offering a compelling performance per dollar proposition against its primary competitor, Intel, in the CPU market. Under the leadership of CEO Dr. Lisa Su, AMD has transformed its strategy, pushing the boundaries of chiplet technology and advanced packaging to deliver leadership performance in both CPUs and GPUs. This relentless focus on engineering excellence and a consistent product roadmap has rebuilt trust with customers and the market, a stark contrast to the execution challenges that have plagued its rivals at various points. Past performance, while not indicative of future results, shows a company that has successfully navigated a remarkable turnaround, moving from the brink of irrelevance to a position of technological leadership. This historical context is essential for understanding the foundation upon which the current growth story is built, whether you're analyzing Fidelity mutual funds or considering a long-term position through a Fidelity Wealth Management IRA. Looking ahead, the future outlook for AMD is a fascinating interplay of immense opportunity and significant risk. The primary catalyst remains the expansion of the AI market. The expectation is that this market will continue its exponential growth, and AMD is positioned to capture a growing share. The success of the MI300 series and the roadmap for future generations like the MI400 will be critical. The reality, however, is that AMD does not need to beat NVIDIA to be a phenomenal investment. It simply needs to establish itself as the clear number 2, a position that could translate into tens of billions of dollars in incremental revenue. Another potential catalyst is the continued market share gains in the server CPU market with its EPYC processors. The performance and efficiency advantages of its architecture continue to resonate with data center operators looking to reduce total cost of ownership. For those using investing sites or the Fidelity mobile app to track market trends, the server market share reports are a key data point to watch. However, the path forward is not without its challenges. The semiconductor industry is notoriously cyclical, and any significant downturn in global economic activity could impact demand across all of AMD's segments. Competition remains fierce. NVIDIA is not standing still and will continue to innovate at a rapid pace. Intel, under new leadership, is also showing signs of a potential comeback, particularly in the manufacturing space with its foundry services ambitions. Navigating these competitive pressures will require flawless execution from AMD's management team. Comment below what you believe will be the biggest challenge for AMD over the next 2 years: competition from NVIDIA, the cyclical nature of the industry, or potential execution missteps. This dynamic is what makes online investing so compelling. It's a constant assessment of these competing forces, a process facilitated by platforms like SoFi and Interactive Brokers that provide the tools for active investing and trading. In summary, the explosive move in AMD stock to over $200 per share is far more than just a fleeting reaction to a news headline. It represents a fundamental shift in the market's perception of the company. The prevailing expectation of AMD as a perpetual runner-up is being replaced by the reality of a formidable competitor that is executing at the highest level in the most important segments of the technology market. The institutional buying pressure, the validation of its AI strategy, and the continued strength in its data center business all point to a company whose growth trajectory is being fundamentally reassessed. While the risks of competition and cyclicality